You ever get that feeling that the whole financial game is, well, just not set up for you? That idea your parents or grandparents had, buying a house, raising a family, all on one salary? It feels like a complete fantasy today, right? Well, you're definitely not alone, and the data, it says you're onto something. Today, we are going to dive into why our global financial system is stretched to its breaking point, what that actually means for regular people, and why that classic American dream feels so far out of reach. So here's the game plan. First, we'll get into the jaw-dropping amount of debt that's weighing everything down. Then, we're going to bring that huge abstract problem down to earth and talk about the vanishing middle class. After that, we'll look at the red flags, the signs that the system is actually cracking. And finally, we'll explore some ideas for how to fix it, a possible roadmap to a fair system. All right, let's jump right in. Section 1, a system on the brink. We're going to start with some numbers so big they barely seem real. But believe me, their consequences are felt by every single one of us. $100 trillion. Just let that sink in for a second. That's roughly the public debt held by governments all over the world. And that's just what the governments owe. If you add in private debt, mortgages, corporate loans, you name it, that number balloons to an almost unimaginable $300 trillion. This is the shaky foundation our entire global economy is built on. Now, to put that 100 trillion into perspective, check this out. The world's governments owe more than the entire US economy produces in a year. And then you have countries like Japan, where their debt is a whopping 230% of their GDP. We're not just kicking the can down the road, we're borrowing from a future that might not be able to pay it back. And this debt isn't just some abstract number. It has real, tangible costs. Take the US, for example. We're now paying about $1.2 trillion a year just in interest. That's now about the same as what's spent on Social Security. Think about that for a second. We're spending as much money paying interest on old loans as we are supporting tens of millions of retirees. And the pressure cooker is only getting hotter. You've got wars that demand huge defense budgets, trade fights that slow down the economy, and aging populations that need more healthcare and pensions with fewer workers to foot the bill. All these things are squeezing governments dry, forcing them to borrow more and more. Okay, so that's the big, scary global picture. But how does all that financial strain actually affect our daily lives? Well, that brings us to our second section, the vanishing middle class, and why that dream from the 1970s is just out of reach for so many people. Back in the 1970s, the path to a middle-class life was, pretty clear for a lot of folks. One decent job was often enough to buy a house, raise your kids, and feel financially secure. Fast forward to today, and even with two incomes, a lot of families are struggling just to pay rent. Saving up for a down payment, it feels like climbing Mount Everest. And look, this isn't just a feeling. The numbers are pretty brutal. In the 70s, a typical home cost about 2.5 times the average yearly income. Today, that ratio has exploded to somewhere between 7 and 10 times your income. The math just doesn't work. The goalposts haven't just moved, they're in a completely different solar system now. So you have to ask, how on earth did we get here? Well, this timeline lays out some of the key moments. It really kicked off in the 80s with financial deregulation. Then you had globalization and the rise of massive tech monopolies, which concentrated a ton of wealth and power. The 2008 financial crisis saw the banks get bailed out while regular families got left behind. And then the pandemic just threw gasoline on the fire, pumping up asset prices for the rich while wages for most people just stayed flat. And all of this has led to, well, this, a mind-blowing concentration of wealth. The top 10% of people in the world now own 75% of everything. Meanwhile, the entire bottom half of humanity, we're talking billions of people, they collectively own just 2%. The middle is just getting squeezed into dust. And if you think that's wild, get this. The tippy top, the 0.001%, that's only about 60,000 people. They hold 3 times more wealth than the entire poorest half of the world's population combined. It's an almost impossible level of inequality to even wrap your head around. When you have this much debt and this much inequality, it creates an incredibly fragile system. So in our third section, we're going to look at the warning signs of collapse, because the whole thing is starting to show some serious cracks. So, what happens when a system this stretched, this strained, starts to crack? We're not talking about a full-on 2008-style meltdown, at least not yet. What we're seeing are smaller but really significant tremors in some of the shadier corners of the financial world. Now, to understand what's happening, we need to quickly talk about something called private credit. It's a massive $2 trillion market where big investment funds lend money directly to companies off the books of the public markets. The key thing to know is that these loans are illiquid, which is just a fancy way of saying you can't sell them off quickly to get your cash back. And that illiquidity, that's where the danger is. It recently caused what sources are calling a huge liquidity red flag, a crystal clear warning that when people get nervous, there might not be enough cash to go around. So here's what went down recently. Investors in a huge private credit fund run by BlackRock suddenly got spooked and made a run for the exits. But because the fund couldn't just sell its assets overnight, BlackRock had to slam the gates shut. They literally froze $26 billion to stop the bleeding. The market definitely noticed, and their stock took a 7% dive. Now, to be clear, this wasn't a full break. The system held, but it was a huge warning shot across the bow. It's the perfect example of what happens when a little bit of panic hits these illiquid assets. It just goes to show that the system's resilience is being tested, and these tests are popping up more and more often. So, we've covered the mountain of debt, its impact on the middle class, and the cracks starting to appear in the system. I know, it can feel pretty bleak. But the sources we're looking at don't just point out the problems, they also talk about solutions. And that brings us to our final section, a roadmap for reform and how we might just build a fairer system. Here are some of the big ideas being floated for a system upgrade. Things like a 2% tax on billionaires to fight that extreme wealth gap, beefing up antitrust laws to break up monopolies that stifle competition, creating something called universal basic assets like public housing funds to give everyone a real stake in the economy, and even using new tech like blockchain to make finance more transparent and fair for everyone. And look, this isn't just some fantasy. History shows us that huge positive change is totally possible. After World War II, big ideas like the GI Bill and stronger unions helped create the most prosperous middle class the world has ever seen. The goal of today's proposals, like universal basic assets, is exactly the same, to rebuild that foundation of shared prosperity for a whole new generation.
We'll leave you with this powerful thought from Franklin D. Roosevelt. The real test of a healthy economy isn't how much the people at the very top have. It's whether we provide enough for the people who have too little. The sources we've looked at today suggest we're failing that test right now. But they also show us there's a path forward. The real question is, do we have the will to take it?
Please like and subscribe.